Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Craig Hallworth, President and CEO of Gunnison Copper Corp. Trades on the TSX with the ticker GCU. Hey, how you doing today, Craig?
Keir, so good to be here and so glad to see all the viewers here today.
Yeah, excellent. Thanks for fitting me into your busy schedule. I know there's a lot going on with your company and also with domestic critical metals and copper, the copper story as a whole. So really, thank you for fitting me in here. Maybe before we get too much into it, for anybody meeting you for the first time, can you give us a short version of your path to mining and how you ended up running Gunnison?
Well, it all started, like it does for most people as a child. My mom gave me that geological hammer, that protective eyewear back when I was a kid, and we did a lot of mining on the shores of sunny old England, and I had a little box with those little glass shelves, and I had all kinds of rocks that I had mined over a couple of summers there. So that's really where it kicked it off. But in earnest, it was in Toronto, Canada. That's where I was born and raised. And, I got into mining there, first with Ernst & Young, Strata, and Agnico Eagle. Those are some of the big clients. And then on to many years with Hudbay Minerals, first 8 years in their Toronto office, working on strategic planning and other financial and business planning. And then 5.5 years down in Arizona, that's when I came to the United States as the CFO of their US businesses, including the Copper World and Mason projects. And about 2 years ago now, I left Hudbay, came over to Gunnison Copper, formerly known as Excelsior Mining. It just really intrigued me. They had a really big, really great deposit. We'll talk about it in this call. And the company just was in dire straits. The predecessor had built a small mine using in situ leach technology and encountered some problems. The mine had sort of not worked out, was closed in 2022, leaving the company with a very low market cap, under 50 million Canadian dollars. So looking at the size of the deposit and knowing what that would be worth as an open pit, I thought at least 500 million, maybe a billion. I took the chance, came over at first as the CFO, and then recently promoted to the CEO of the company.
Yeah, and Hudbay is making a lot of noise. Obviously, in Arizona, I think they've established a big office. They've got multiple development projects. They recently just finished off an acquisition of a project, Arizona Sonoran, which is not too far away. So interesting experience for you to come from a company like that with all that's kind of going on in copper in America and copper in Arizona. Your experience with them, what did that teach you about building copper mines and the permitting process?
Well, look, my comment on Hudbay, it's a really well-run company. Like, take a look at their track record. The last few years have been phenomenal. The last 5 years plus, like, really great. Their senior team, like, I know them all, amazing leaders, and look what they've accomplished. They're the third largest copper district in North America. So I think they've got ambitions. If they were, say, to acquire Gunnison Copper one day, they'd be the second largest district in North America. So I think there's ambitious, strong leaders there. I think they're looking to grow their portfolio of copper in North America. I think they're going to have a really, really impressive portfolio soon. I think there's more acquisitions to come. And I think Gunnison Copper would make an excellent addition to their portfolio.
Now let's get into what you guys have. You guys have quite a lot. You have a lot going on. I was doing some reading, and obviously you've known about the company under its previous name. Really like what's been going on in terms of the turnaround and a lot of the news flow. You guys have been able to raise abundant capital the last couple of years, so good on you for that. But you guys have 12 known deposits over about an 8-kilometer economic radius. Can you break down kind of what you have?
Well, I'll start off with our Johnson Camp mine. This is an operating mine. We built it over the last, 2 years with our partner Rio Tinto. Everyone's heard of them, the big company. They funded us over 200 million US dollars. This was sort of the, refurbishment, the construction of new facilities. It's a mine restart. This is a camp that's been mining since the 1970s. Interestingly, it was actually one of the very first mines to use SXEW technology back in the 70s for leaching of oxides. That was a revolutionary sort of step change in technology. And that's why it's really exciting that today we're now part and pioneering the next big step change in technology, and that's with sulfide leaching. So Rio Tinto, their Nuton, it's called Nuton. That's their sulfide leach technology, and we're using it today at the Johnson camp. We started production with it back in December of 2025. We're making copper with it, and we've been making it ever since. And in fact, we're actually selling that to Amazon Web Services. They're using it to build their data centers. So it's going directly into a critical industry. This compute, they call it compute.
Yeah.
This sector of infrastructure, like this is essentially a new sector of infrastructure. And everyone's seen the news. Everyone's seen hundreds of billions, trillions, big numbers being thrown around by these big tech companies. And if you look at the history of the country here, if you look at when was the last time when that kind of money had been spent on infrastructure, right? It was maybe like the internet boom. It was maybe fiber optic, right? It hasn't been done in many, many years. The country needs it. We need to be a leader in AI. We are the leader. And I think we're going to continue to be the leader because they're spending so much. And all those data centers, you know what they need? They need copper, a lot of it. Like a hyperscale data center, that can take something like 50,000 tons of copper, all that bus bar, all that wire, all that power. They can be in the gigawatts. That's the kind of power that we're talking about. And it's not just the copper in the data center, right? It's the copper in the power plants. It's the copper in the wires that take the power from the plants to the data center, and so on and so forth. So there's a huge new sector of demand, and people want that copper to come from a clean American source, which is what we are. That's why Amazon picked us. People say, like, why did Amazon pick you? Why are they buying your copper from Johnson Camp Mine? It's because of the Nuton technology. The copper that we're making at Johnson Camp, it's actually the cleanest copper cathode produced in North America. This is a study that was conducted by a third party for Rio Tinto. If you look at the emissions per ton of cathode produced, it's the lowest. The water usage is the lowest. And that's why they wanted to do it. And if you look at Time Magazine, people read Time Magazine. If you look at the website, guess who's in Time Magazine? Us and Nuton. We're in Time Magazine last month, one of the top 10 most sustainable companies. So it's incredible to see a mining company in one of the top 10 most sustainable companies. It's not the top 10 most sustainable mining companies. It's the top 10 most sustainable companies. So I think that says a lot, and I'm really, really proud of the Johnson camp. And one last comment on that is, look, we built that thing in under 18 months. So I'm very proud of the workforce, what they were able to accomplish. Because when people look at junior companies, like you look at our market cap, we're about $200 million. They look at a company like that, and not many of those companies can say they just built a mine in 18 months. Not many of them can say they permitted a mine in under 12 months in the United States, virtually unheard of. So we're really proud of that track record. And on top of that, there was no lost time accidents.
Well, that's excellent. So let's unpack that just a little bit more. So you've got this Johnson camp, and it's a joint venture with Rio Tinto under their Nuton LLC. How does that work out in terms of like ownership? Who owns that? How much does Gunnison own? And of all the copper produced, what's the flow of revenue?
It's a really unique arrangement, and people are always really fascinated when we talk about the details. So the details are Gunnison Copper is the 100% owner and operator of the Johnson camp. Okay, we own the entire asset. We are the operator. There's not a single Nuton employee that's operating this mine. Okay, now we do have obviously advisors from Nuton, but no operating employee. And in exchange, what Rio Tinto is providing us is with funding for every dollar of cost. So whether that is a dollar of CapEx, whether that's a dollar of ramp up, whether that's a dollar of OpEx, if it's a dollar for closure costs eventually, every dollar. And in return, we're going to repay that money from the profits of the Johnson camp. And if we can't repay it by mid-2030, there's kind of a deadline here, then the account zeroes out and we don't owe them anything else. So it's a really great deal for us. I think it's a really great deal for them. The whole point of it, if people are scratching their heads right now wondering, well, why would Rio Tinto do that? It's because of the revolutionary potential of the Nuton technology. Because what is it? Like, what is this technology? It allows you to process sulfide copper ores into finished copper in this country. You don't need a smelter. You don't need to ship it to Asia. You can control the copper all the way to finished product because you're leaching the ore just like with oxide copper. So that's the revolution right there. And in addition to that, it's substantially cheaper on CapEx and OpEx versus a concentrator approach. When you add then the costs of transport of freight, TCRC, penalties, you got to have a smelter, you got to have a refinery. So that old, let's call it old technology vertical, is potentially to be replaced by this new technology vertical, which is leaching on a pad, just like oxide, and then plating into finished copper in the SXEW plant. So because of the revolutionary nature of this, what they want to do is demonstrate that it works. They want to build a track record, show it in a mine that is real world, that's full scale for a couple of years. And then I think you'll see it rolling out in the next wave of sulfide copper ore, projects in this country. And so that's worth it to them. That's worth a few $100 million. Like that's a multi-billion, maybe tens of billions of dollar business for them one day. So I think it makes all the sense in the world that they're investing a few $100 million here, which most or maybe even all of which we're going to pay back from the profits of Johnson between now and mid 2030.
In terms of nameplate annual production from Johnson Camp, what's the total amount of copper cathode that you can produce in a year?
25 million pounds. And, for those think in metric tons, it's something like roughly 10,000 metric tons a year. So in the scheme of the mines of the world, it's a modest size, but in the scheme of we don't need a concentrator, we don't need a smelter, we don't need a refinery, I think what we're going to see is that it's going to show to be cost effective over time. Now, we're in the ramp up stage at the moment. We built this last year. We're ramping up. Our Q2 results will be out soon. You'll see that we're increasing our production capacity versus last quarter. I think we'll be, and I'm guiding the market, at commercial production, which I would define as 60% of nameplate by the third quarter. And I'm expecting us to be up to full production, that full 25 million pounds by the end of the year.
Excellent. And so you've kind of walked us through Johnson Camp. You've got your flagship asset known as the Gunnison Copper project. Could you give us a good overview on what type of asset that is, how advanced it is? Does it have an MRE?
So this is a deposit with scale. If you look at the resource, the main pit, it's got about 850 million tons. It's got a satellite pit called Strong and Harris. That's got 75 million tons. We've got it at the PEA level. We've got in the mine plan there, if you include both deposits, what's actually in the mine plan, about 540 million tons are being leached. So that enables us to produce about 175 million pounds of copper per year on average over a 21-year mine life. And if you look at that in the, zoom out a little and look at that in the context of the country's total production, you're going to see that it's about 10% of the total country's production of refined copper from ore. So it's significant. It's nationally significant. In the United States last year, in 2025, 43% of the copper we consumed came from domestic sources. Okay, only 43%. That means 57% is a deficit. That's a shortfall that we have to bring in from foreign and unreliable sources. So 10%, that would go a long way towards closing that deficit. That's what we're telling people. We're telling people in Washington, we're telling people around our state of Arizona, we're telling investors, right? And they can see the significance of the project. And look, take a look at the NPV, right? From an investor economic point of view, $2 billion US at an 8% discount rate after tax. I think that shows a very good return on the 1.55 billion in initial capital. If you look at that as sort of a capital efficiency, it's greater than 1. And if you compare that side by side with peer projects, I think you're going to see that's considered a fairly good capital efficiency. And we made improvements. We spent some money in 2025. We did a drill program of a limited nature. We did a bunch of testing. We did lab results. We were able to increase the NPV from 1.3 billion from our initial study back in Q4 of 2024 to the 2 billion I just mentioned by March of 2026. And the main way we did that is by adding about 500 million pounds more copper metal to the project. So we took it from 2.7 billion pounds of copper to 3.2 billion pounds of copper. And people just really loved that. That was my number one feedback I got from the new report was, we just love the way you added so much more copper to this project. Because at the end of the day, Kier, that's what mines are all about, right? Is produce metal, make metal. We need to sell, in our case, copper make it and sell it domestically to our customers around the country. And so if we can add 500 million more pounds, if we can add 20%, it just is gravy for everybody, and everyone loves that.
What's sort of the strategy for 2026 for the company for this asset for Gunnison?
So we launched our 2026 drill program a couple of months ago now. It's a 15 million US dollar program. We're drilling about 138,000 feet, over, some number of about 150 holes, something like that. And we're first focusing on metallurgical testing because, and I alluded to this a little bit at the beginning of our conversation talking about Hudbay, but Hudbay and others, Capstone and South 32 and others that, investors can figure out who, those are the types of companies, right? The well-capitalized mine builder types, the 10 billion market cap, range, that it's easy for them to raise $1.5 billion, right? It's easy for them to get that capital to build that size of mine. They've done it before. We built 3 mines while I was at Hudbay, right? And Capstone has built, take a look what they've done in South America recently. So they're experienced. I think the market, when they look at those companies, look at the case where when Hudbay acquired the Cactus project, Arizona Sonoran, they paid a lot. The market rewarded them well with a great, they had a high valuation. That went really well because when Hudbay or similar gets into a stock, it shows a stamp of approval to the market that this well-regarded mine builder thinks that this mine's going to be built. So that's what we're seeking here, like as a catalyst in the next 12 months. We're seeking what I would call a toehold investment, something in the 5, maybe 9.9% range, not too much, but something to show that the right company, not just any company, the right company, and there's only a few of them that I'd consider the right company, has partnered with us and that they're going to be the ones to eventually build this project with us. That's what we're looking to achieve. And to get there, I think what we need to do is generate more metallurgical test data. If you look at our PEA, the one that came out in the first quarter, our copper recoveries, our acid consumption, that was based on about 25 column leach tests, okay, which is sufficient data points for a PEA. That's a preliminary analysis. But I think in the scheme of getting to a reserve, getting a PFS, getting a mid-tier to buy in, I think we need a lot more data points, right, to get that statistical confidence. The population, the number of samples. Your viewers that are familiar with that will understand we need more data points. And that's why in our program this year, we're planning 270 column leach tests. So that's more than 10x what we had in the PEA. We've already completed drilling the met test holes in the main deposit. So all that core has already been completed. The drills are now moving on to Strong and Harris. That's the high-grade satellite deposit. I haven't talked much about that yet, but that's the deposit that we added in this latest study. It's got a grade that's about triple what the main pit is. So this is a grade of about 0.85% total copper. The main pit is about 0.43% total copper that we're leaching. So, maybe it's more like 2.5, but 2.5 to 3 times the grade in the main pit. It's a high-grade satellite, and that's the next one that we're drilling to get the core from. So we've got maybe 70 column leach tests in process right now at the lab, and more to come to get up to that 270. So what's going to happen as we start to get that data? It takes not a week or two for this type of data. It takes 30, 60, 90, even 180 days. So it's not something that happens overnight. But as we get that data, as we get enough data points, we'll be sharing those with those couple of companies that we think are the right ones, the ones that we want to partner with. And then the second thing that I think we need to do to attract that toehold is progress on our permitting. So a little bit about our permitting. We've had really great success. We've got a really great track record. With the Johnson Camp mine, for example, I talked about that. We permit amended that in under 12 months. So that mine, was previously operating. It already had its state permits. We're only under the state permitting regime because we don't have a federal nexus. And so for those 3 state permits, the air, the aquifer protection, and the mine land plan of reclamation, the agencies know us well, right? Because we've been an operating mine since the 70s. They know about our modeling, our groundwater modeling, our air modeling. They know our people. They know our mine site. So really, it's quite straightforward for us to amend it. And that's how we were able to do that in under 12 months. And people just love a mine restart, right? They know that this is a mine This zone's been mining forever. People's grandparents worked there. So there's no opponents there. Nobody opposed the Johnson camp at all. And that's great. So what that means is when we look at the Gunnison project now, we're expecting to have a similar success with the permitting there because that's already permitted as well. Some people don't know this, but the Gunnison deposit had mining on it previously. The predecessor company, Excelsior Mining, they had done in situ leaching on the deposit. It didn't work out. I think I mentioned this already in the call, and it shut down. But the silver lining to that is it's fully permitted today. So we're doing, again, amendments. And when it comes to amendments, they're a lot more straightforward than brand new permits on a greenfield site. So we're looking to deliver permits in hand with no lawsuits as soon as we can. And I think that we can deliver the first one by the end of this calendar year. So I think the mine land plan of reclamation, I told the team, I said, let's try to get this before the end of the calendar year. We'll see if we can achieve that. But I think that we can. And once we do, once we show that one of those 3 boxes is checked, I think it goes a long way with the mid-tiers because, look, they've been burned. Companies have been burned in the United States because they acquire a project, they think it's straightforward on the permitting, they start getting litigated, and then 10 years later, they're still in litigation, right? And that's not good for companies, right? Delay is money. Time is money, as they say. So those are some boxes we're planning to check in the next 6 months. And I'd be looking and hoping optimistically to bring in a toehold in Q1 of 2027. And if you look at case studies of other companies that did the same strategy, universally, you'll see great results for their stock price after that. So that's why it's a focus for me. But whether we land that or not, I think the met testing data, I think the permit advancement, and the third one that I haven't mentioned yet is the resource expansion. We believe there is a lot more copper that we can add here, both at the Strong and Harris deposit, which is the high grade one, as well as the bottom of the main pit. Because if you look at the bottom of the main pit, it's the sulfide zone. We've got on our deposits, the top 90% is oxide. There's a transitional zone and then a sulfide zone. Predecessor company who did all the drilling for in situ, they couldn't recover sulfide in situ. You just can't do it. You can only recover it with Nuton technology, which requires it to be on the surface. So they did a couple of holes that went deep past into the sulfide zone. So we know there's sulfide there, but it hasn't been explored properly. So I think we're going to see a big upside on the sulfide zone this year.
Sounds like you got a lot of moving pieces, a lot going on, which is great. In terms of the location of the Gunnison project and infrastructure, can you talk a bit about that? Obviously, it's a very active mining area, but just to put this in context for those that are not, there, they don't have boots on the ground, they haven't necessarily been there. Can you explain just how prolific the infrastructure is in the region for copper mining?
I think it's in a really good location. I mean, we're about an hour southeast of Tucson, just down the I-10. We've got fairly significant towns, Benson and Wilcox, about a half an hour drive away. So what that means is we've got local workforce available, right? Local workforce, we don't need to have a camp like some mines that are very remote or in the mountains. People can live in big towns or the city of Tucson, which has all the amenities. It's a nice, lovely drive down the I-10. Overall, it's remote though. There's nothing else there really. And right beside the site, you've got the I-10, but more importantly, the Union Pacific trunk line, which means that we can have a rail spur, in other words, a direct rail connection to our plant. And that's going to save us a whole lot of money because look at some of the other projects nearby. The ones that don't have the direct rail link, they have to truck and transload everything that comes in and out to the rail. So that can add $20, $25, $30 a ton in both directions, right? On the materials in and your product out, right? So there's a huge benefit here to having the rail link. And then in terms of power, like we've got power to the site right now because we've got an operating mine. We'll have to upgrade that, the voltage on that. We'll have to upgrade those power lines, but that's not a problem. And Sulphur Springs, that's the power plant, the power company. They have a power plant only a few miles away from the site. So it's in a really good location. We've got the water we need. I'll just touch on that finally, is we're able to pump the water we need. These are the rules. We have enough water, but we're going to be low water usage compared to a comparable concentrator operation. If you look at some of the other projects, the ones that have a concentrator, they're using a lot more water, right? That's wet tailings. In our case, it's all leaching, whether it's the oxide leach, which is the vast majority of the value of the project, or it's the sulfide leach, which is a smaller portion, but similar using the Nuton technology, which we're showing works today at the Johnson camp. So when you're leaching, that means no tailings, no wet tailings. And so the water actually, this is an interesting point, is when our pit gets beyond something like year 4, the water that we need to dewater the pit, so there's water that just sort of comes into the pit once it gets below the water line, which is about 600 feet in this area. The water that's pumped out of there will actually be, in some cases, more than we need in total for the entire mine and process. So in some cases, we're going to have excess water that we need to figure out what to do with. That's something we're going to study this year. Is it something that we just recharge into the ground nearby? Or is that something that there's some other use, maybe in agriculture or maybe in a nearby town, et cetera? So it's something to study, but in terms of all the infrastructure, I think it's in an ideal location.
Excellent. Let's turn our attention to capital structure. How many shares are outstanding on the company?
So we have about 505 million shares outstanding. That's a market cap, if you look at the price today, something like 200 to 220 million Canadian dollars. About 150 million US dollars. We've done a lot of work in the past 6, maybe 9 months to clean up the share register. So we had a large shareholder last year, a fund called Greenstone. This was a 10-year private equity fund out of the UK. And they held, actually, when I joined the company 2 years ago, about 45% of the total stock, right? So they were a very big shareholder. And what had happened was everyone knew that they were sunsetting in early 26. People knew the fund had to wind up, right? It's a 10-year fund. And so people like a year and 2 years ago, they were saying things to me like, well, how on earth are you going to move all that stock? Like, who's going to take it? Are they going to dump it in the market? So, people were nervous. But we proved what we could do with it in the first 6 months of this year. We did a lot of work, with our banks, Paradigm out of Toronto, Canada, and Canaccord out of Canada over the first 6 months, and we moved the entire Greenstone block. We also did a bought deal with Canaccord and Paradigm that you may have Inventum that you may have seen back in May with no warrant required. And almost all that stock was new institutions coming into the stock. So we took the stock from 0 institutions. When we pivoted to open pit in late 24, there was 0, none, no institutions. And we now have about 60% of our share register is now institutionally held. So there's something like 40 or 50 institutions in this because none of them are holding large blocks. The biggest blocks are like 5 or maybe 6 or maybe 7 at the absolute biggest. But mostly it's spread amongst very small, percentages amongst a wide range of institutions. So this was by design. This is what we wanted. This was something where we followed the Arizona Sonoran playbook. Because look what they did. They did the exact same thing. They had Tembo, we had Greenstone, they had Tembo, similar situation, big fund, they owned a big block. They were able to break that up and get it widely held by institutions. And then what did that do for them? It made them a great candidate for Hudbay to come in with a toehold investment, right? Because there was no longer a big blocking stake. They were widely held. And that's what we are right now. We, meticulously worked on that. We've now got a widely held share register, mostly institutional. And now we're wide open and ready to accept the right company with a toehold investment, right? There's no blocking stakes. There's no other strategics in the stock. And it's widely held by smart institutions. So I think we're in an ideal position to execute on that strategy that I mentioned of bringing in a toehold, hopefully in early 2027.
In terms of where Gunnison Copper, where the project's located, how close is it to Copper World?
Copper World is about 30 to 60-minute drive away from us. So look, I know we talked about Hudbay, and I don't want to talk too much about them because there's lots of other companies that we're looking at too that would make sense. For example, Capstone. But I think it would make a whole lot of sense for Hudbay. They've really put together quite a package in southern Arizona, right? They've got Copper World, now they've got Cactus, and then take a look, not far away, up in Nevada, they've got the Mason project. So some people said, like, well, they've got 3 projects. Why would they want another project? I think the answer is they're trying to put together a big package of projects. And you can do some mental connect some dots after that. What happens after that? So I think adding another big project bolsters their portfolio for whatever you think they might do with that portfolio after that.
And if I was reading right, have you not also extinguished some debt?
That's right. This was one of the other big concerns of institutions back in early 2025 when we first pivoted to the open pit. When I was talking to them, I'd be in places like Toronto, Canada, talking to them saying, hey, look, here's this, we're an open pit now. And they loved it. They all said, why didn't you do this earlier? Why did you even ever do the in situ? Why didn't the predecessor company just do an open pit? The answer was they didn't have the land. They didn't have all the land. You need a lot more land to do an open pit because obviously there's a big pit. With in situ, you're just drilling some wells. There's no big pit. The other thing with open pit is everything you mine out of that big pit's got to go in a big waste rock pile, right? So I think what we're saying is a lot more land was needed. It wasn't available. It only became available in November 2024 when we were able to close an important land option agreement. And so that land option gave us the control of the land that we needed to do it as an open pit. So that was really what unlocked that. But to come back to your question of the debt, there was about a 15 million US debt facility. This was something that had been drawn down in those sort of hard years for the company, the predecessor after the in situ mine closed to keep the company afloat, and it was secured. So if there was a default, then the whole company would come crashing down, and it was due in June of 2026. So people were very worried about that, and by people I mean the institutions, and that's why we didn't get much uptake in early 25. We got almost none from the institutions. It was really in 2025 a retail story. Retail investors loved the Johnson camp, especially in the United States. They loved that we were bringing on a new copper mine. It was like the first one in a long, long time. And also, if you remember, that's when the President Trump came in. And when President Trump came in and started doing all those executive orders, that's what really sparked, I think, this strong market right now for critical minerals that's, persisted, with some volatility lately that we've seen, but generally persisted since he came to office. So it's been a good market. It helped us with the retail. That allowed us to raise the money we needed. We put a lot of that money into the ground to make the new PEA in March 26 that increased the NPV from 1.3 to 2 billion. But what it also did was allowed us to get rid of that secured debt. We sort of paid half of it in cash, and the other half was converted into stock, and that's now already been digested through the market long ago.
And just recently, just the other day, actually, you're at the State Department with some notable individuals. What was that experience like?
It was an incredible experience, and it was just something that was very last second. It wasn't something that we knew about until basically the day before. I had to very quickly jump on a plane to Washington, drop everything. They didn't tell me where it was, what time it started, what was happening. I didn't even know what time to wake up on the day because they didn't say if it started at 9 a.m. or 5 p.m. So I spent a lot of that day just wondering, like, well, what am I supposed to do now? Luckily, it didn't start till 2 p.m. And so when we all went, it was at the State Department. It was a lot of, I'd say the audience there was a mix of American mining CEOs. I was one of them. There was maybe a dozen, maybe 15 others. And then a lot of the people there were in the educational side of things. There was about 14 of the top colleges that do mining. There was a lot of other supporting people for the colleges, some students. Really what the president was getting at there is, and this is a message that came from him, it came from Marco Rubio, it came from the whole top team there that was there, is that it's incredibly important for the country to rebuild its industrial base, right? That we need to, it's not something that is like some slogan or some, for show thing. It's a real thing we have to do. It's for the defense of the country, right? If we want to be able to defend the country, We have to be able to produce all the things that we need critically to A, keep our society functioning if the supply of things we need drops to zero from foreign countries in the event of some sort of global conflict, and B, to basically be able to produce enough units of military type units to defend ourselves. Because, the country, I believe, has the most superior technology militarily in the world. But if, let's just say, you have 1 unit of a technology and it can, let's say, take out 5 units of the enemy technology, so that shows, a superiority, but the enemy can produce 100 units for every 1 unit that you can produce, you cannot win that war. You're not going to win. Maybe you can in a short run, but in the long run, you can't win because the volume is going to overwhelm you, right? So I think what it is like a existential crisis here, frankly. And I think there's going to be infinite money, not just 400 billion, which has been announced to date in various tranches. It's infinite money. There's no limit to the money to stimulate the industrial base to reconstitute here, right? And critical minerals is only one part of that. That's the part that matters the most to us as Gunnison Copper because, we're a producer of copper, which obviously is a raw material. We're selling it into the domestic supply chain, so we're doing our part. And we want to accelerate the Gunnison project to dramatically increase the amount of copper that we're doing our part with and pumping that into the, the supply chain. So us and the other CEOs, we all talked about it. We all agree, like, this is for real. We need to accelerate whatever metal it is that's critical that we're doing, get our people. And then the second part of it is the human resources. The human resources that the country generates in mining disciplines has really declined, right? And if you also look at retirements and the workforces, like, it's declined. I think it's probably because if you're a young person in college, you probably dream of going into tech if you're in this country, or maybe Wall Street or something like that. I don't think the number of people who thinks at 20 years old, I want to be working in a mine, or I want to be a mine engineer, or, et cetera. I think that's a smaller, percentage than it used to be. So that's what the president's trying to change. That's what the money, the injection of funds, they want to crank out and really increase these disciplines. And it's also the trades. But where are those people coming from? Look at what's declined rapidly. It's basically evaporating. Computer science. They don't need anybody in that anymore because AI has already replaced that, right? If you look at people that do coding or people that do computer design, it's like already gone. It's already dead. So it's like people that are taking those degrees need to retrain and go into things that are needed. And they're really pushing critical minerals disciplines. There's a whole lot of disciplines at the college level, but also at the trades level, right? So I think we need to remember both of those paths, and that's what they're stimulating.
So to get back to Gunnison, the stock, what are some catalysts over the next 6 months that investors should watch out?
I think the most exciting thing we're doing right now is the drill program. So this has multi facets to it. So just as a reminder or refresh, we've got the metallurgical testing. We'll be batching that as the results come in. We'll be press releasing that. We've got the infill drill. I didn't talk about that yet, but we're bringing it up to a reserve level for our next study. And the next study could be a pre-feasibility study. That's our base case. Or it could be a feasibility study if we do an accelerated path. That's still to be determined. And one comment on the infill is we have extremely low conversion risk here because the main deposit, Gunnison, the one that's maybe 95% of the total value of the project in the March PEA, that's almost entirely measured and indicated already. And that's thanks to the fact that it was a previously producing mine, right? It was really well drilled out in the oxide zone. So really, it's only the sulfide zone that needs exploring and upgrading to measured and indicated there. And then the satellite deposit, that's entirely inferred. So that's going to have some conversion risk to it. But I think overall, the conversion risk is extremely low here just due to that predecessor company and the previous drilling. And then finally, the resource expansion. That's what gets everyone excited, right? If we can, first it'll be announcing intersections, perhaps polymetallic. We know there's zinc. We know there's silver. That's something that has zero in the current PEA, but we know there's almost 1 billion pounds of zinc. We know there's about 9 million ounces of silver. And that's before we've done the additional expansion drilling. So we could be looking at a situation with a significant new byproduct credit being added in the PFS. Now, that would require us to do something like a concentrator approach
Right.
for the sulfide zone instead of sulfide leaching. So
Mhm.
there's some work to be done there to see if that makes sense, and it's something that we're looking at. Whether or not we add a polymetallic element, I think we're going to see significant expansion in the sulfide copper zone at the Gunnison pit. And I think there's a great chance of that too in the Strong and Harris pit, hopefully at those higher, hopefully those higher copper grades persist. So I think you'll be seeing a lot of announcements on that, and as well on the permitting path. As we get each permit, with no lawsuits, we'll be press releasing all about that. So these are the biggest announcements. But again, to just circle this all back to kind of our core strategy here is the biggest thing we can announce is a toehold from the right big strategic partner. Because in every case study we look at, when we look at a company like us who does that, who brings in that stamp of approval, who brings in that potential acquirer and brings in that help from their deep technical benches, it's always a fantastic result after that for the stock price. So that's what we'd like to do as our core strategy. I think I've outlined all the ways we're going to get there. And I think we have a great chance of doing that by Q1 27.
Just lastly here, in terms of current valuation, if I'm looking at it, oftentimes it's what's your multiple to NAV. Companies have been getting taken out at 1 and over 1 to NAV. Advanced companies trade at like sort of like 0.6, 0.7, 0.8 to NAV. What are you guys currently trading at?
We're at about a 0.2. And people ask me about this all the time. How come you're only at 0.2? Well, if you look at where we started our journey, about 18 months ago or so, when we pivoted to open pit, we were at 0.05. So we about 4x since then, right? So we have made a long way since then. And before I finish that thought, I just want to point out that our daily volumes have massively increased. They were about 50,000 shares a day when I joined, and now we're into the millions. I think something like 3 million a day is our 30-day average. So we've had massive increases in volume. We've had really good 4x or so on our PNAV. I think we need to do another 4x or so from here to get to that peer group average. If you consider our peers to be companies like Ivanhoe Electric, Faraday, Arizona Sonoran prior to the takeout, they're probably trading at something like 0.8 or so, maybe 0.9 at the most. So I think to get there, what we need to do is essentially all the things I already said, the de-risks that we talked about, but also bring in the strategic. All those other peers, they've got big names, right? Ivanhoe Electric's got Friedland, Lundin Group's in BHP now, they're in Faraday, Arizona Sonoran had Hudbay. So again, we don't have that big name at the moment. And that's why I think this is a great time to buy for investors to add or start a new position, because once we get that big name, which I'm confident we can by Q1 of 27, if all goes well, I think we'll be off to the races on the stock price. And the final comment I'll just make about it is we turned over a lot of stock this year, right? About something like 60% of our total float exchanged hands in the first 6 months. And that's because we did the enormous Greenstone secondary, right, in 2 tranches, where we took about 40% of the company and widely distributed it to new institutions, right? And then we did a raise. We did a raise in May. So if you add those together, it's something like, 50 to 60% of the total float. There's also some convertibles that, came into play there. So when you take into all that into play, a lot of stock traded hands. I think it may still be digesting a little bit. And I think as we now execute, we're in a time of execution, as we execute on the drill program and come public with the results that I think we'll be able to deliver. And as that digestion has completed, I think we'll start to see the meaningful re-rating occur.
What's your next conference on your schedule? Are you going to Beaver Creek?
Yes, absolutely. We'll be at Beaver Creek. I look forward to meeting any investors that may be watching there. But before then, a very important conference for us is the Defense Industrial Base Consortium Accelerator Conference in Philadelphia at the end of August. So if anyone doesn't know, I don't know if I mentioned it, but we, Gunnison Copper, have joined the Defense Industrial Base Consortium. This is a group of companies, mostly American companies, and we're committed to improving the industrial base and supplying the defense sector. So this conference that's coming up in August is going to be a very big deal. There's going to be a lot of people from the Pentagon there. There's going to be a lot of people from Washington, and there's going to be a lot of talking about, who are the next projects that the government wants to partner with. And I think everyone's been seeing announcements lately, right, about big partnerships, big funding. They want to see accelerated timelines on the project. They want to see the critical minerals going into the defense sector in this country. And those are all the things that we're planning to do. So I think we'd be a great partner for the Pentagon, and I'm hopeful that we'll be able to strike a deal, but we'll see. And if you're at the conference, please come and say hello.
Yeah, excellent. Well, Craig, great pitch. Got a lot going on. Seems like a very interesting company. Got multiple levers here for value creation. If anybody's looking for a pure play American focused copper developer, as well as one with already production, it's here with Gunnison. You got a great ticker, GCU, on the TSX. So anyways, I wish you lots of luck, and thanks very much for being able to sit down with me today and do a first look at Gunnison, and hopefully you'll be back.
Thank you for having me, Kier. So great to talk to you.